the conversation was less of a conversation. So today I want to have a bit of a conversation. Go anywhere. We've got slides per usual, but we can do whatever you guys want to do. I want to talk about something that is possibly controversial. This is a fun conversation. Should be. Central bank digital currencies.
Cool. I'm ready. Okay. I got some thoughts on this too, so I'm excited for this to see what you got.
There's strong opinions on both sides, so I'm really interested to hear where you guys are at. But for anybody that's not familiar with this is something that certainly has been in the news recently. But if you're not quite clear on the concept, what is a central bank digital currency? What we're talking about here is crypto, but it's run by a central authority. So this is a completely centralized digital currency. It's on a blockchain, but it's on a private blockchain. It's controlled by the central bank. It's controlled by the government of that country. It's legal tender. Like I said, it's private, and it really enables only digital transactions.
Now hold on one second. I already have a question.
Yes.
I was under the understanding, and correct me if I'm wrong, because I'm not up completely on it. But I thought it was backed by the central bank, like it was the liability of the central bank. Okay, so it is.
Absolutely, yeah. This is money in tokenized form, but running on a blockchain that's controlled by the central bank, by the powers that be. So it absolutely is. It's legal tender in that sense, but it moves from kind of what I would call digital IOUs today when you look at just digital money, right? I can Venmo Nick, or I get my direct deposit. It all is happening electronically. Those are, in terms of all the parties involved, really just digital IOUs. What we're talking about here is something where those dollars exist on a blockchain, instantaneous settlement, have properties as well. So it introduces a new kind of element of digital properties to money that don't exist when you have something that's physical, in the same way that you can't turn that off. And so that's what we're talking about here is exactly that, those liabilities, those reserve notes, but on a blockchain.
Okay.
Cool.
And I want to talk about some of the properties, because that's why you have strong opinions on one side or the other. So if we jump to the next slide here, and this is where it gets really interesting.
No, go ahead. I'm sorry.
Yeah, so this is money that, because it is on a blockchain, is programmable in a sense. Completely transparent, arguably, it's secure, right? So there's, I think, some positive elements to this, because it's very easy to look at this from a very negative perspective. And it's also something that's a bit more accessible. Potentially it's more efficient, right? We could make the argument that a digital currency issued directly from the Federal Reserve would maybe not necessarily circumvent the banking system, but it might put the banks in competition with the Fed, or the Fed in competition with the banks in terms of their existing business. So maybe payments are cheaper in a sense.
It removes the middleman in a sense, because, and if you think to what's going on like in the regional banking sector and all that stuff right now of banks, you deposit your money, the bank takes your money and uses it elsewhere, and it's not like you can go to the bank and just like pull out $1 million in cash. It's all kind of an IOU. Whereas with a digital currency like this, where it's all on a ledger at your fingertips, you could instantly move and transact without needing that sort of middleman. And that's one of the positives. I think the other side of the coin is like, okay, if it's all, if you're removing the middleman of banks, and, the government could see what you're doing, and, the stuff that they could program into it, like that's where it gets a little funky for me. It's like, do we really want everybody, at the top, like with binoculars on everything we do and where it goes?
Well, hold on one second, son. I'm going to play the other side to it and take it, from maybe, your personalized level of scrutiny, and make me look at it from a business standpoint of view. You could now, if you can, which obviously you can do, and we've talked about this in nauseism forever, saying it's ridiculous that you can transfer money into people, instantaneously, and yet you still have on the business side takes 2-3 days for things to clear, and talking about trading in particular. If you have businesses that can now move money, I don't care who's looking at it, because everybody's looking at your taxes and doing everything anyway. But if I could now move something instantaneously from one place to another, that's a game changer in a secure fashion that's backed by the Fed. I mean that's a game changer. Don't you both agree?
Yeah, I would absolutely agree, or do agree with you there, Tony. And I think the Fed just launched that in a way. And so we have Fed Now, we don't have Fed Coin. And so with Fed Now, which I don't think is actually operational like fully until July, but that is getting the existing system just up to speed where a lot of private companies are already. So it's still the IOUs, but in this case, it's going to be almost instantaneous instead of just the settlement process that occurs in the existing financial system among the banking participants. So we're moving there, and that's going to largely be, again, for businesses, for banking, for institutions. I think, that will be opened up at some point. It makes sense logically that you would start to see that available for retail users, not quite at the point where you have, let's say, an account with the Fed directly, like you might with a central bank digital currency. But I do think, that system, the improvements to the existing system that are super positive, and I think we're all in agreement, are almost here. What I worry about with something like this, transparency, yes, there's an element of privacy invasion, but it's the programmability and whether or not, if you were to give a central authority that power, would that power be abused? And what we're talking about with programmable money here is something where negative interest rates could be imposed on balances with a click of a button. You could have money that in theory expired. You can control the behavior of a society or a population if you have various interest rates associated with different demographics. If, again, your money expires, you're going to go out and spend it.
Or if it's designated to certain things, like you can only use this for this purpose or this for that purpose, it does have the potential to restrict that movement.
So do you guys think that that would be abused? Because I think this is happening, right?
Yeah.
Hopefully there are some protections in our country, but there's 100 and some different central banks for different countries. I think it's like 95% of global GDP. The central banks of those countries are looking at this. I mean, the Fed has put out a research paper. This does exist in China, by the way. This is real. What we're talking about is real. It's just not here.
Yeah.
So I think it's happening. Do you think it'll be abused?
It's a great question. I mean, I think in China, it's a lot easier, I think, to control from the top. I don't think it would be as easy here. So I would say here it wouldn't, but I think that problem could definitely exist, in less developed places. I mean, when you think of other places that have had hyperinflation, like in Venezuela and some of those type of countries, it's already been abused. You know what I mean? Like that situation has already happened. I don't think it could happen here though. Hopefully not.
I mean,
what if J-Pow just falls asleep and hits his head on the keyboard and, interest rates go from 5% to negative 20% and everybody's poor at the end of it? That could happen.
I mean, yeah, monkeys can fly out of my, anything can happen. I mean, I don't know. There's always room, I guess. All right. Okay. Yeah.
Do you think so?
I think you're going to see some form of it. I don't think in this country you're going to see some kind of broad, totalitarian central, control. We still have states and states' rights, and you've seen a little bit of pushback here, whether it's been Ron DeSantis in Florida. I think possibly Senator Cruz, Ted Cruz, has put something forth. So, there's some pushback here. I think there's also a lot of, negative or kind of misunderstanding around this too. Yeah. But Yeah, I do think that you're going to see the system move closer to this, but will it be widely used by people, right? Do you trust the government is ultimately what this comes down to. And a lot of people don't, for right or wrong.
Yeah. And my follow-up to this is like, so what does this change for the government itself? Like, does the Fed still exist in this circumstance, or is the Fed and the CFTC and all these other, like, you know, financial related agencies, are they like combined into one? Is there a new one? Like, how does this, you know, like, how does this work in all of those places that currently have their own kind of, you know, governing bodies associated with it? Because I think that's one of the good things that we have in our system is that, you know, there's no one centralized kind of controller of everything money related, whether it be banking or, you know, trading and clearing firms and all this stuff. If money is now centralized into one simple, you know, place, is it now under the control of one single entity, or is it going to be, you know, multiple agencies and, you know, states and all that stuff?
Yeah, I don't look at it so much as there's a single body that controls the technology itself. You know, I think largely it makes the system, if everybody was on the same system, it would make it much more efficient.
We've got, I didn't mean to interrupt you. We've got a cynical group of emails, at least the ones that come to me, and the majority of them are saying that the government will abuse it.
We seem to have a historical precedent of, you know, abuse. I'm not saying that's here.
Is that how we're going to say it? Historical precedents?
Well, I wouldn't say, you know, it's not specific to the United States, but I think if there's power and control to be had, it will be had. You know, it will be, you know, abused in some cases. We've certainly seen that. I guess to kind of get back to where Nick was at, it's like, what does this ultimately do? This gives the institutions in power that control everything even more power. Yeah. Where, you know, some people want that, and some people are really opposed to that. But that's ultimately what it leads to. Objectively, this now gives you, as a monetary authority, the ability to do X, Y, and Z. I wouldn't go so far as to say turn the money off, but when you look at you know, what's happened to, I would say, the perception or the confidence of other countries in even the U.S. dollar via the abuse of power, sometimes there are these knock-on effects that are hard to anticipate, you know, right away. You know, a good one of, you know, good example is probably what happened with the invasion of Ukraine, the freezing of assets, and now, okay, your dollars are not your dollars. This makes that just a lot easier to do, more real. I don't think that would happen to an individual citizen, but it's a lot easier for that to happen now if this is the system that things run on.
My last question, you think the ledger would be transparent to individual citizens? So like anybody, like you can access, you know, like you can see specific wallets. Obviously you can't identify them unless there's some sort of identifying property to them. But do you think that the whole thing would be transparent and you could see, oh, well, this wallet just got, you know, dropped X amount, and see where that, you think that would be part of it, or would it be only the government can see the transactions?
Yeah, the individual participants wouldn't be able to see this information, but the government would see everything, right?
Yeah.
Like, we'll be able to watch what you're buying online in real time if you wanted to, in theory, right? Not at all saying this, like, first of all, does not exist in this form in any case, nowhere close to it in the U.S.
Yeah.
But it's a fun conversation to have. So I do want to make sure that people aren't like, you know, we're just fear mongering here. Yeah. But yeah, in theory,
who's got the tinfoil?
Right.
Let's get the tinfoil hats out.
That's in theory, that's true.
Okay.
Okay.
We have more time. I thought we were. Is that?
We can keep going. We'll breeze through the slides. It's all right.
Your segment. Let's go.
Yeah. We're not going to cut you off.
Well, a couple other just quick points here. You know, sometimes there's a little bit of confusion around what a central bank digital currency is and what a U.S. dollar stablecoin is, or any sort of fiat stablecoin. So we've just got a chart here just to kind of compare the two. So CBDC, central bank stablecoin, has been issued by a private entity. And that's where I really think you've seen let's say we'll use the Fed as an example, kind of the market has forced its hand. If you remember the Facebook Libra,
yeah, that was,
this wasn't a central bank digital currency, obviously, but this technology it exists. It's going to grow whether we embrace it in the U.S. or not. It's real. It's here to stay, right? And so private entities.
Hasn't China done a little bit more on this and actually like come out with like programmable money that has like expiration dates, like almost like an option to people, so that people can spend money more, and I think they've gone so far as, and I know they do a lot more, allegedly do a lot more. I don't know if we do less in the U.S., but like I had a person just write in about digital surveillance, like as so far as like, hey, you jaywalk or you go through a light, instead of just taking a picture of your car, now they actually have a picture of your face, and they can take the money immediately right out of your account. You start getting, when everybody has access to something, your ex-wife can start taking money out of your account. Everybody can start taking money
that's
out of your
over,
account.
dude. That ended 20 years ago, all right?
Yeah, that's exactly right.
I'm talking about my future ex-wife, Nick. I'm not
You
talking about
planning
your
for the
mom.
next one? Oh, my God.
Yeah, this was launched by the PBOC. This does exist in China. I don't know how widely used it is, and I don't know if a lot of what you've described is actually in place in terms of the expiration dates. It might be. But yeah,
Well,
if you're
stimulate the economy, I mean.
But I mean, to the surveillance state, I've read the same exact things. You could see why this might be very attractive to the CCP. It again, it gives you a lot more control and power in ways that you didn't have before, and that might be attractive. So yeah, it does exist in that form, but it's largely been, in my opinion, as a way for the central authorities to compete with private industry to an extent. This is in response to the wide usage of various apps to make payments in China. Or you can see how, following industry here in the US, you can see now this is in order to look at digital currencies, to explore a CBDC by the Biden administration. There's an executive order, there's research that's been done, because Facebook was getting there, and they said, well, wait a second, we run the money, so you can't do this. And that's where I think you're seeing a lot of this come from. It's not so much at this point, this is going to directly compete with a stable coin or with Bitcoin or that, that form, but it could get there. And then just a couple other kind of quick points here. We already called this out, but this is a private blockchain, so it gives you these capabilities I'm describing. It is legal tender. When you look at what a stablecoin is really used for today, stablecoin is just used as a way to store some value without volatility when you're trading in crypto, when you're operating on chain. I mean, it's very early, again, as I always mention. CBDC would be all transactions are digital, and that again gets us to that really scary place. You do not have any independence then from that financial system, whereas at least today with cash, yes, you're using dollars, you're at the mercy of currency devaluation, but you have independence from a system where it's programmable and transparent, right? You still have privacy in a sense.
Very good.
Cool. So yeah, that's just kind of the last one. We've got just a couple points that we've already talked about quite a bit here on the last few slides, but wanted to bring this idea up as it's getting a little bit more play in the media, and certainly something that is right on the horizon.
I'll leave it with this from the YouTube chat. What could possibly go wrong? I think that's a good way to end the segment.
All right, my man. Thank you, Ryan. Appreciate your time. We're going to take a quick 90-second break. We're going to come back. We got a market measure, Nick. You're going to have your thinking cap on. We'll be back in 90 seconds. Ryan, you can go at breakfast.
All right. Thank you.
Peace.